A very good evening to the members. We extend a very warm welcome to all the participants on behalf of Ethical Standard Board on today's webinar on fees relative size, tax service to the audit clients, and responding to non-compliance with laws and regulation. It is indeed a pleasure to welcome and extend a greeting to the today's dignitaries of this session, CA Mangesh Kinde sir, Chairman Ethical Standard Board, CA Kamisha Soni ma'am, Vice Chairperson Ethical Standard Board, CA Raj Chamla sir, Member Ethical Standard Board and Vice Chairman of CMIB Committee. As the members are aware, the announcement on the date of applicability of certain deferred provisions have been issued by ICAI on 29 September. And pursuant to this, we have received lots of queries from the members regarding the applicability of these provisions. And due to this program has been conceptualized. With this, now I would like to request C. Kamisha Soni ma'am. She is a Vice Chairperson of Ethical Standard Board. She is a Chairman of Professional Development Committee and the Chairperson of the Committee on Public and Government Finance to please enlighten the participants about the today's webinar and the topic on fees related size. Thank you, ma'am.
Yeah, thank you, Rashmi. A very good evening and greetings, everyone. Members are welcome to the today's webinar on fees relative size, tax services to audit clients and NOCLAR contained in volume 1 of Revised Code of Ethics. Our Honorable Chairman, Ethical Standard Board, CA Mangesh Kinnaraji, under his able leadership, ESB has conducted various outreach meetings, programs on these deferred provisions. And after taking views of various firms and members, these amended provisions are made. And our council colleague, C. Raj Chawla ji, he is also Vice Chairman of very important committees, Direct Tax Committee and Committee on Member in Industry. And he is also member of this Ethical Standard Board. And dear members, so the objective of today's webinar is to bring awareness amongst members about the applicability of deferred provision. So this webinar would highlight the revised provision of fees relative size, tax service to audit clients, and responding to non-compliance of law and regulation applicable for member in practice and service, as these provisions have made applicable from 1st October 2022. Just give me a minute so I can share my screen. Please confirm my screen is visible.
Yes, ma'am.
Yeah, thank you. I would also recognize the presence of ESB from ESB office side, Ashish ji and CA Rashmi ji. So specifically, as you all are aware, the revised 12th edition of our ICI Code of Ethics has come into the effect from 1st July 2020. This Code of Ethics for the first time has been segregated in 3 volumes, that is 1, 2 and 3. And volume 1 specifically is related to International Code of Ethics 2018. That has been, we can say that converts International Code of Ethics, that is in our volume 1. And volume 2 of Code of Ethics, that is totally based on our domestic tax regulation and provisions, which are related to C Act regulation, we can say. And volume 3 of Code of Ethics comprises the decision of the courts, councils, appellate authorities, and disciplinary directorate on professional misconduct. That is our volume 3. And just before going into detail of these deferred provisions which are now applicable, I would just like to mention about difference between these volumes and certain interesting things about our all 3 volumes. So that is generally differences of between 2 volumes and how will these be applicable. So dear member, if you understand these basic things, you will be able to apply this code in very effective manner, and also you will get answer of all ethical issues. First is that applicability of volume 1, which is based on self-check and self-regulatory nature. The code is principle-based, and entire volume 1, chartered accountants are required to comply with the fundamental principles, that 5 principles, and apply the conceptual framework. And volume 2, that is totally clear guideline, guidance, do's, don'ts, and other related provisions related to our own CA Act, regulation, and council guideline. That is volume 2. So that is the major difference between 1 and 2. Then second point, if there are different provision in other act and regulation, so specifically related to auditor appointments, qualification, disqualification, indebtedness, relative definition, auditor's rotation, management consultancy services, etc., then those provisions under which the audit is being conducted shall prevail. That provision, that act regulation will prevail. And third is about before taking any assignment, just bifurcate nature of assignment or work. That is in the difference between audit, assurance, non-assurance, certification, management function, etc. And according to that, the relevant provisions will be applicable. Then also, that is also important to whom you are providing your services, whether your client is public interest entity, individual, company, firm, trust, about KYC also. These factors are also important. And there are certain provisions which impact both volume 1 and 2 of Code of Ethics, and we have made changes to align those provisions. So that also we'll have to consider. So these are certain basic things about our Code of Ethics that should be always, I think we can follow that. Then about the our volume 1, 2, and 3, how you can get that volume. So here I have mentioned link of that volume, and otherwise you can also download from our ICI.org, from our website and from our portal. Apart from this volume 3, we have already uploaded various FAQs, various guideline related to website, revised guideline, and certain other social media detail also we have uploaded. So here I have just given link of that particular initiatives of our ethical standard board, and also member can refer digital learning hub, where we have already uploaded our audio video presentation about on our revised Code of Ethics. So member can refer that also. So now we will discuss on deferred provision. As you all are aware that Council of ICI in 2020 deferred 3 provisions of volume 1 due to the then prevailing situation due to COVID-19, and it was also decided that such deferment will be enforced till further notification of the institute in this regard. So these provisions are, one is responding to non-compliance of law and regulation, NOCLAR. Second one is fees, relative size, and third is taxation services to audit clients. So I will brief about fees, relative size, related provisions, and our chairman Mangesh ji will be deliberating on other 2 provisions, that is NOCLAR and taxation services to audit client. So just I will also share certain development at ICI side. The council subsequently decided the deferred provision of volume 1 were made applicable and effective from 1st April 2022. Previously, it was decided. And however, the council further decided that the applicability of deferred provisions be further deferred for a period of 6 months, that is up to 30th September 22, to ensure effective adoption and implementation by the membership at large. So council in its meeting August 22 decided the above mentioned deferred provisions, which have been deferred from 1st July 20 to till 30th September 22, will be made applicable from 1st October 22 with certain amendments. So the announcement of the applicability of provision has been issued on 29 September 22 on our institute website also, so member can refer that. Then about the compliance. So this slide contains provision for enforcing compliance of the code, and also about these provisions what we are today discussing. So you know, it is well-known maxim that ignorance of law is no excuse. So as a result, the non-compliance of provisions of the code will be deemed as violation of clause 1 of part 2 of second schedule of CA Act. So Under that, the non-compliance of provision of the volume 1 will result in liability under the disciplinary mechanism of the institute. So let's now see the overview of the structure of revised code 19. So that is volume 1 of Code of Ethics is structured in 4 parts. Part 1 contains the provision of complying with the code, fundamental principle, conceptual framework, which includes the fundamental principle and the conceptual frameworks and is applicable to all professional chartered accountant. It means whether members are in practice or members are in service. Part 2 is applicable for members in service. Part 3 is applicable members in public service, means practicing chartered accountant. And part 4 specifically, that is new insertion in this revised code, is independent standards applicable for member in practice when performing assurance services, and that is divided into 2 parts. Part 4A. And today what we are discussing regarding fees related provisions, and that is also fall under part 4A, independence for audit and reviews, that is section 400 to 899, independence related provision. And part 4B is independence for assurance engagement other than audit and review engagement, which applies when performing assurance engagement that are not audit or review engagement. That's why I have mentioned in my previous slide about applicability of this provision related to nature of engagement also. And in this volume 1 code, glossary is also there, so which contains defined term together with additional explanation where appropriate, and describe terms which have a specific meaning in certain parts of the code. So the glossary also includes list of abbreviation that are used in the code and other standard to which the code refers. So certain important definition also here I would like to mention, which are related to fees related provisions. So one is about the public interest entity. So about that, I would like to draw members' attention to a few important terms like this PI, audit engagement, audit client, that I would like to mention here. So in 2019 edition contains a new term, public interest entity, is what it has not been used in Code of Ethics 2009. So here we have also in our revised code, we have defined this PI and definition of PI and listed entity, same that has been already in International Code of Ethics also. But here we have made certain changes in our Indian Code of Ethics. So as per our code, PI is defined as first, a listed entities. Second, an entity defined by regulation or legislation as a public interest entity. Second, for which the generally audit is required by regulation or legislation to be conducted in compliance with the same independence requirement that apply to the audit of listed company. That will also consider as public interest entity. And for purpose of this definition, it may be noted that banks and insurance companies are to be considered as public interest entity, and other entities might also consider by the firms to be public interest entity because they have a large number and wide range of stakeholder, and factors to be considered generally include the nature of the business, such as the holding of asset in a fiduciary capacity for a large number of stakeholders. So that will also consider as a public interest entity. So other two important definition here, I'm reading as it is that is mentioned in our revised Code of Ethics. One is audit client. So audit client refer to an entity in respect of which a firm conducts an audit engagement. When the client is a listed entity, so audit client will always include its related entities. And when the audit client is not a listed entity, audit clients includes those related entities over which the client has direct and indirect control. So second definition about audit engagement. Audit engagement refers to a reasonable assurance engagement in which a chartered accountant in public practice expresses an opinion whether financial statements are prepared in all material respects or give a true and fair view or are presented fairly in all material respects in accordance with an applicable financial reporting framework, such as an engagement conducted in accordance with standards on auditing. This includes a statutory audit, which is an audit required by legislation or other regulation. So that is the definition most important in case of these fees related provisions. So I would also like to mention about previous provision in as per our Code of Ethics 2009. That time only one publication was there, and earlier fees provision of ceiling on the fees under self-regulatory measures was there in our previous code. So just I would like to mention that provision also. Professional fees for audit and other services received by the firm from one or more client or companies under the same management do not exceed 40% of the gross annual fees of the firm, and exception to this, no such ceiling on the gross annual professional fees of a member would be applicable where such fees do not exceed 2 lakhs of rupees. So previous provision was that 40% of total receipts and provision were not applicable in case of if receipts is not exceeding 2 lakhs of rupees. And further, the provision would not be applicable in case of audit of government company, public undertaking, then nationalized bank, public financial institution, and other appointments made by government. So, and in our 12th edition of Code of Ethics, which came into effect from 1st July 20, the above provision of ceiling on the fees were repealed from the self-regulatory measure from volume 2 of Code of Ethics. उसको हटा दिया था वॉल्यूम 2 और पहले जो पार्ट उसमें मेजर में था, एंड द प्रोविजन रिलेटेड टू फीस रिलेटिव साइज contained in volume 1 of Code of Ethics, and that is already in previously that have been deferred from July 20 to September 22, and now applicable and effective from 1st October 22. So this is the history of these fees related provisions. Now, fees related provisions, just I would like to, where this is mentioned. So fees related provision are mentioned in the volume 1 of revised code under independent standard. So that is part 4A, independence for audit and review engagement related to fees. So section 410 fees says the nature and level of fees or other type of remuneration might create a self-interest and intimidation threat in 3 circumstances. So just I would like to mention that 3 circumstances. 1, fees relative size, when the total fees generated from an client, audit client, by the firm expressing the audit opinion represent a large proportion of the total fees of that firm, the dependence on that client and concern about losing the client create a self-interest and intimidation threat. Then fees, second provision, which is already applicable about overdue fees, that we'll discuss later on one slide, and that is already applicable. And third provision is related to contingent fees. So that 2 provisions are already applicable, and about the fees relative size, that provision was deferred and now it is applicable. Just 1 minute. Ashish, just 1 minute. Huh? Some Wi-Fi issue. So I'm just switching my Wi-Fi.
Yes, madam. Yes, madam.
Yeah, sorry for the inconvenience. So the provision says when generally the total fees from an audit client by the firm expressing the audit opinion represent a large proportion of total fees of that firm, the dependence on that client and concern about losing the client create two threats, that is self-interest and intimidation threat, to our fundamental principle. So just I would here mention about self-interest threat. Self-interest threats means the threat that will inappropriately influence a chartered accountant's judgment or behavior, or it will impact on opinion also. And about intimidation threat means the threat that a member will be deterred from acting objectively because of actual or perceived pressures, including attempts to exercise undue influence over the accountant because of he's getting large amount of fees from particular single client. So example of action regarding this threat. So here in our revised code, some safeguards are also available. So that safeguard to address such type of threat, one is that firm may increase the client base in the firm to reduce dependence on the audit client. So this safeguard is available on our code, and this provision intend to provide guidance on steps towards taking safeguards against threats arising in above circumstances and protect independence of auditor. So these are basic conceptual things related to fees. And now next is related to about the provision applicable. So just I would like to mention about the provisions related to fees. So where an audit client is not a public interest entity, so I am giving that provision that in case of non-public interest entity and for 2 consecutive years, the total gross annual professional fees, total fees from the client and its related entity represents more than 40% of the total fees received by the firm expressing the opinion on the financial statement of the client, the firm shall disclose to the institute, the fact that for 2 consecutive years, the total of such fees represent more than 40% of the total fees received by the firm. The firm will have to disclose to the institute regarding for exceeding fees of 40% from a particular client. In earlier deferred provision, disclosure shall be made to those charged with governance of the client if the total fees represent more than 50% fees of total fees of the firm. It was there in our revised code of ethics before these changes. And now this threshold percentage changed to 40% in case of non-public interest entity and 20% in case of public interest entity. So exception of this provision is provided in case where the total fees of the firm does not exceed 20 lakh. Just I would like to mention here, previously in our self-regulatory provision, there is limit is 2 lakh and after that 5 lakh, and now in this provision, presently that is 20 lakh of rupees in respect of a firm, including fees received by the firm for other services rendered through the medium of a different firms or firms in which such members or firm may be a partner or proprietor. So this exception is applicable for all audit clients, including audit clients that are public interest entity. And earlier deferred provision, the exception apply to firms with fees not exceeding 5 lakh rupees. So further exception to the provision is provided in the case of audit of government companies, public sector undertaking, nationalized bank, public financial institution, or where appointment of auditor are made by the government or regulator. That is also exception available related to these provisions. And the word regulator have been added in the revised provision. Now, these provisions related to public interest entity, if our members are doing audit of public interest entity, provision are same, just percentage is different because that is requirement of more independence in case of audit of public interest entity. So that is in revised provision, that is limit is 20% in case of public interest entity, and other all provisions are same what I have mentioned in our previous slides related to non-public interest entity. So regarding what will be the positions, so that is the number of year also here I would like to mention. So it is further important to note that if the fees described above continue to exceed 40% or 20%, as the case may be, after 2 years, the firm shall each year disclose to the institute the matters. And in earlier deferred provision, the safeguard of pre-issuance review and post-issuance review were there, which have been repealed in revised provision because the safeguard is difficult. It is amounting to a parallel audit and making the audit assignment as unviable, falling in those categories and amount to breach the client's confidentiality. So previously there was provisions related to two important segments, that intimation to those charged with governance. Second one about the safeguard related to pre-issuance review and post-issuance review related to that particular audit client. So now that has been changed in this deferred provision, which are now applicable. So what will be the reporting mechanism? So for disclosure to the institute, the framework will be defined by the Ethical Standard Board. Ethical Standard Board will define the reporting format also. Timeline of reporting also will be specified by ESB with certain format. And it is also proposed that undertaking or declaration of member will be taken by member with respect to their independence, and ESB will also form a mechanism for further step to be taken in this regard. And it is also proposed that the mechanism will cover the mandatory peer review type mechanism also and any other mode of quality review. And just for information of our members, that this provision will not be like retrospective, it will be prospective. So that is about reporting mechanism. And next is related to what is the position and International Code of Ethics. So internationally in ISBA, disclosure to TCWG, that is those charged with governance of audit client, is considered as safeguard to threats to independence of auditor. So in International Code of Ethics, same provision what we have already mentioned in our before this amendment. So during the discussion of rollout of the deferred provisions, the members' apprehension was about disclosing the fact to the TCWG. It means management, reporting to management of that particular client. So disclosure to TCWG is not really a safeguard in Indian context. Rather, it has chances of creating intimidation threats. So the independence of auditor would also be affected if the disclosure made to the clients. So the purpose of the code is to bring better audit quality work, independence, transparency. Disclosure to audit client about fees dependence is not a safeguard. That's why here Ethical Standard Board has changed this reporting format regarding this excess of 40% of fees. So just I would like to mention one through one example about this provision. So here Mr. A and Company Chartered Accountant Firm is doing audit of XYZ Private Limited company, private company, PQR subsidiary of XYZ Private Limited for 3 years, and the total fees received from XYZ is 10 lakh rupees per year, and PQR is rupees 5 lakh per year. So just I will give example of that. In first case, total gross annual professional fees of the firm are rupees 50 lakh, out of which rupees 50 lakhs are received from the audit of banks and 10 lakh received from the audit of government companies, where appointment made by C&AG. Does such case require disclosure? So here, total gross annual receipt of the firm are calculated after excluding fees received from audit of bank and government companies where appointments were made by the C&AG. That is 50 lakh minus 25 lakhs minus 10 lakh, that is 15 lakhs. Be considered for reckoning the requirement of disclosure. So fees relative size provision are not applicable if the firm's total gross annual fees do not exceed rupees 20 lakhs according to the exception of the provisions. Hence, no disclosure requirement in this case. So now I will take second case. In above case, the total gross annual professional fees received from the audit client, that is XYZ Private Limited, and PKR Private Limited are 15 lakh after including the fees received from the related entities, and audit client is not a public interest entity. Assuming the gross total fees of the firm are 50 lakh and no fees are received from the exempted category. So now to derive dependence of firm A and company on the audit client XYZ Private Limited and its related entities, 15 lakh divided by 50 lakh comes to 30%, which does not exceed the threshold percentage of 40% in case of non-PI audit. Non-PI audit. Thus, no disclosure is required. But we can take third case. In the instance case, assuming the audit client is a public interest entity, so dear member, the firm shall disclose the fact to the institute since the percentage exceed the threshold percentage of 20% in case of public interest entity. So these are just provisions which are related to fees related, specifically related to deferred provision and now which are applicable. So other fees related provision of volume 1 of Code of Ethics, and all members are aware about that. One is related to that falls under section 410. One is fees related size. Second one is fees overdue fees. So just I'm giving provisions related to overdue fees. So in that case, self-interest rates might be created if a significant part of fees is not paid before the audit report for the following year is issued. So example of action that might be safeguard to address such a self-interest threat include: 1, obtaining partial or maximum payment of overdue fees, or having an appropriate reviewer who did not take part in audit engagement review the work performed. So maybe reviewer also one of safeguard is available. So the requirement of this section says when a significant part of fees due from an audit client remains unpaid for a long time, the firm shall determine whether the overdue fees might be equivalent to a loan to the client and whether it is appropriate for the client to be reappointed or continue the audit engagement. So that is self-regulatory measure, and above safeguard are discretion, totally discretion to the firm. However, there is no bar on signing the audit report in these circumstances and on continuing the particular audit. So this is provision related to overdue fees, and one also part of this fees related provision under section 410, which is related to contingent fees. Though the fees which are based on a percentage of profit or which are contingent upon the findings or results of such work is not allowed except in cases which contingent upon the findings or results of such work not allowed as per clause 10 part 1 of the first schedule of to CA Act, except as permitted under regulation 192. And certain two changes are there as per regulation 192. Two services are added under the exemption category. One is related to insolvency professional and second is related to fees for rendering non-assurance service to non-audit clients apart from other general allowance. For example, receiver, liquidators, and debt recovery services. So with that, two more services are added in under regulation 192. So these all provisions are related to fees, section 410. But here only one deferred provision was there in our present code, that is fees related size. So that I have already covered. So if member has any query, you can I'll put in chat box also. And thank you very much for your attention. And it's been a really great pleasure. And I would also like to mention quote of Gyan Vatsal Swami, what he said, ethics, niti, niyam or siddhant doesn't know your post, position and power. So that is most important about our code of ethics also. So thank you very much. And now over to Rashmi.
Thank you so much, ma'am, for this wonderful session. Now I would like to invite Sir Mangesh Kindre sir, the Chairman Ethical Standard Board, Currently, he is also chairman of Valuation Standard Board, vice chairman of Audit Committee, and member of various standing and non-standing committee of ICI. Sir, may I request sir to please enlighten the participants on the topic tax service to audit clients and responding to non-compliance with laws and regulations applicable for members in practice and services. Thank you, sir.
Thank you, Rashmiji. First of all, whether there are, first of all, there's a good presentation by Vice Chairperson and the past Chairperson of ESB, Kemisha Madam. And are there any queries? So that I think Kemisha Madam wants to, go for some work. So if there are any queries specifically addressed to her, that can be tackled right now, or I'll tackle the queries at the end. If there are one or two.
Yes, sir, there are query.
So, Mangesh bhai, I am here, so you can cover also your provision, and later on we can take.
Okay, no problem. So I think we can go ahead with the remaining two provisions. As I said, it was a good presentation by Kemisha ma'am, who is my colleague in the council and past chairperson of Ethical Standard Board also. Not only that, she is also, I think, technical advisor to ASBA, International Ethics Standard Board for Accountant, for a member, and on behalf of ICI. We also have presence of C. Raj Chawla, who is a member of Ethical Standard Board, Secretary of ESB, Ashish Bhatnagarji and Rashmiji, and my dear friends, colleagues, professional colleagues. Very good evening to all of you. Let me at the outset apologize you for my sore throat and maybe a little bit disturbance while talking because of my not so good health today. But I'll try to cover this presentation. I think I'll just share the screen and we'll start the presentation. Rashmi ji, Ashish ji, screen dikh raha hai?
Yes, sir.
Yeah, so shall I start that? Okay. Yeah, so friends, as Kemisha ji has rightly mentioned, the three provisions were deferred earlier when we adopted ICI Code of Ethics 2019. In 2019, initially these three provisions were deferred because of the COVID scenario, which was prevalent at that time. And these three provisions have been considered by Ethical Standard Board now and have become applicable from 1st October 2022. Out of that, fees relative size provision has been dealt by Kemisha ji. So remaining two provisions, I'm going to enlighten you all. In fact, every time I speak, every time I discuss this, there are new issues, new things which are coming up. And as Kemisha ji has rightly mentioned, in Ethical Standard Board, we'll be very shortly, since you all know there's a World Congress of Accountants. So immediately after that, we'll be taking certain FAQs. We are already receiving some queries, some issues regarding these three provisions. So we'll be definitely considering the FAQs in the Ethical Standard Board and coming out with the FAQs very shortly. Today also, whatever queries we can tackle, we can discuss. We will discuss. If at all there is an issue in tackling any query, we'll definitely discuss this in detail, because there can be a lot of issues in this. This is entirely, a couple of these are entirely new concepts to India. Rather, they were prevalent for some years, but in applicability terms, it is completely new. So definitely some issues may be there. Perhaps it might not strike to individually Mangesh Kinre or Kemisha Soni per se. So that we'll discuss in the Ethical Standard Board, and we'll come up with the frequently asked, the FAQs in a short period of time. So to start with, the first provision which I'm going to tackle is a tax services to audit client. It is subsection 604 of volume 1. Now, friends, as we all know, Regulation 191 of Chartered Accountants Regulation actually clearly allows the Chartered Accountants in practice to be as an advisor or representative in a taxation matter. So as far as practice area is concerned, this is definitely allowed to us. Whereas I know we can undertake all these administrative services. Only thing is that we should not turn into a management services. That's an important underlying factor which we must remember. As far as audit is concerned, already volume 1 provision is there that auditor is allowed to do certain administrative services. In that administrative services, while highlighting giving the illustrations of that. In volume 1, 3, 4 types of services have been mentioned, that is word processing services, preparing administrative statutory forms, submission of such statutory forms. So in a way, indirectly, it has been tackled in a volume 1 also, and the underlying principle remains the same, that the administrative services or helping the client in assisting the client, the routine matters is allowed to us. The issue arises when there are certain matters which are borderline matters, and when we are doing an audit for the same client, whether we are able to do these matters or do these services to the clients or not. And therefore, this taxation services to audit client, that's new provision which was deferred and now being applicable, is important to understand. This provision has been discussed in 3-4 parts, different 3-4 types of services, and that we'll tackle one by one. First is a tax return preparation. Now, see why basically these services have been discussed. When we do an audit, definitely an independence is required, or the auditor is supposed to be an independent person conducting an audit assignment. Naturally, when one looks after the taxation aspect, whether there are any threats to that independence, that has to be analyzed. And from that perspective, there is an analysis has been made in volume 1 regarding certain taxation services, and I think all kind of taxation services will be covered in this. So first is tax return preparation. The volume 1 clearly says, and as Kamisha ji has rightly mentioned, let me again reiterate that the volume 1 does not, or at very few places specifically tells us to do this thing or not to do this thing. Volume 1 is a principle based volume, so it will give a direction to us. It does not mean that it does not clearly says at certain places that certain things should not be done, but it sounds us, it enlightens us, it sensitizes us. And in that sense, we'll have to look into these provisions. At certain places, definitely what cannot be done at all, that is very clearly given. But a majority of the things one has to look it from the point of view of the sensitization, and one has to analyze its own position every time. Generally, tax return preparation will not give me any threat for the auditor for conducting an audit. So there is no threat to an independence as far as auditor is concerned. That has been mentioned in this volume 1. So again, these are the usually, why this is being considered. Tax return preparation is usually an historical information. So what we do is just a factual information which is being compiled and put it in the return form. So if that is being done, definitely audit independence is not touched. But friends, as we have seen volume 1, I have already mentioned, it has to be in an administrative capacity. So it requires in volume, in that example also, that preparing a statutory forms for approval of the client and submission it as per instructions of the client. So this is very important in this regard, that one cannot step into the shoes of the client and file the return and prepare the calculations and file the return on his own. So basically it's a preparation for the approval of the client, which will not give me a threat at all. So usually there is no threat unless and until the auditor steps into the shoes of the client. So there's no harm as far as tax return preparation is concerned. As regarding the calculation, again going back to the provision, if same person is doing a calculation and same person is doing an audit, there can be a self-review threat. Now, it can be avoided by way of deputing some other person from the firm to do a tax calculation, and a person who is signing or doing an audit can be a different. So generally, auditors shall not prepare a tax calculation, right? And current or deferred tax calculation. But that does not preclude from to the auditor. We have highlighted this, that from reviewing this during the course of audit, you are definitely bound to review these tax calculations. And definitely going to say that, no, I'm not agreeing to this one. I think according to me that this should be a proper calculation. So that is not prohibited, or that will not create a review threat as such. But basic calculation, if it is done by an auditor, there's a definitely threat. So one has to depute some other person or some other partner in the firm to do a calculation, if at all that tax calculation is given for an auditing firm. Third thing is a tax planning. Now here, there are dual threat possibility, that is self-review threat also and advocacy threat also. I might review my own work when I'm while I had done the planning. And what I've done the planning, I have to do an advocacy for that. And therefore, my audit independence may get impacted adversely. So therefore, there are two kinds of threats are available in this, are possible in this tax planning matters. And therefore, appropriate safeguards have to be adopted using the other professionals who are not in the audit team, reviewing the audit work, etc. So generally, the tax planning shall not be done. So other tax advisory services to an audit client, when the effectiveness of the tax advice depends on the effectiveness, depends on a particular accounting treatment. So typically, if an accounting treatment has to be changed, and then the tax advice will be different. So these are interrelated matters. Definitely, it will create a self-review threat. And therefore, when the direct relation to the accounting matters is there, as far as tax advice is concerned, that shall not be provided by an auditor. Generally, otherwise, if at all somebody else is doing from the audit firm, the tax advisory services and the auditor is a different, one can overcome this threat by way of proper documentation and review of the audit work, etc. As far as valuations are concerned, again, it might create a self-review or advocacy threat. The code again gives a principle that, see, the valuation is something which is a subjective matter. So if a standardized valuation is there, if there is no much deviation in possible vis-a-vis the different valuers, then perhaps there is no issue. But subsection 603 gives a clear-cut indication to us, if I'm an auditor, whether I can conduct an valuation or not. And these are there in front of your screen. If in case of a non-public interest entity, the valuation involves a significant degree of subjectivity, or if it is a material effect on the financial statements, definitely the valuation cannot be done by an auditor. So if it is completely immaterial part, or if it is a standardized way of valuation where there cannot be no change at all, there is a possibility of having the valuation done by the same firm, having a different valuer, or doing that kind of a thing. As far as public interest entity is concerned, the code is very clear. Again, a material impact individually or with the aggregate of the other provisions. If it is there in an aggregate or an individually, then in that case, the valuation should not be done by the auditor. So typically, valuation is something perhaps maybe some kind of a red flag is there, because there is no provision of doing a valuation by some other professional in the same firm in this provision. But as far as tax planning and tax calculations are concerned, there are a possibility of done by the same firm. But in valuation, unless the standardized valuation method are there or immaterial impact of valuation is there, the same firm cannot be, the auditing firm cannot be doing a valuation services to the audit client. And the last one here is assistance in resolution of tax disputes. Typically, a chartered accountant who is an auditor generally undertakes the kind of advisory in terms of assessments or some kind of adjudication matters. Now, this talks about the resolution of tax disputes. Now, if an auditor is involved in the resolution of tax disputes, then again it will create a self-review or advocacy threat. Till the assessment level, perhaps it is just a factual position which is being produced to the assessing officers or the authorities. When you start when the dispute starts, there comes an advocacy aspect, and there the auditing independence may be impacted. The code clearly says that such services shall not be provided if it involves acting as an advocate for an audit client before a court, or amount involved are material to the financial statements on which the firm expresses an opinion. If the amount involved are huge, then there is no question of us giving an assistance in a resolution of tax disputes. So representing a client before the authorities in a disputes where the material impact or the material amount is involved, large amount is involved, on which the opinion has to be expressed, that should be avoided, or that shall not be allowable. As far as acting as an advocate before the court is concerned, this we have clarified that for the purpose of this subsection, court shall not include tribunal. So till the tribunal, one can take the matters, but before the High Court, when the matter goes much beyond the tribunal, these things cannot be done. As I mentioned, the restrictions of audit firm appearing as an advocate does not preclude a firm or a network firm from having a continuing advisory role in relation to the matter that is being heard before a court, for example, responding to a specific request of information. So if the information is asked, right, or providing a factual accounts before the court, now that does not mean if the court asks me to produce that, right, that does not mean that I'm assisting for resolution of tax dispute. So that matter where the accounting information has to be given for the resolution of tax dispute, and where as an auditor I have to give certain things, I am allowed to do these matters as far as tax disputes are concerned. So these are the provisions where the taxation matters which are handled by the auditor, the guidance has been given. I used, and again I repeat the word, guidance has been given by the volume 1 of the Code of Ethics. Some places it has been very clearly mentioned that this shall not be provided. Some cases the volume 1 or the code sensitizes us that this will lead to this kind of a threat. So be aware, these couple of provisions, this couple of kind of safeguards can be taken, say doing a work by some other professionals, or getting audit work reviewed, that kind of a things. So we'll have to look into it from case to case basis, unless something which is specifically prohibited to us. Please don't understand, please don't take it as that if I'm not prohibited, then it means that the code allows me. There is no blanket permission as such. There may be blanket prohibition at certain places, but permissions have to be analyzed case to case basis, and one has to understand this in that right perspective, these provisions. So this is about the taxation provision. Let us go to the further provision, and which is perhaps another important, or not completely, but certainly a new kind of aspect from the auditing perspective in Indian scenario. And it took us some time for even deliberation also. And that is a NOCLAR. NOCLAR, the full form is non-compliance with laws and regulation. Now, what does that mean? Now, it refers to any act, I mean, it's there on the screen, but I'll just read and then discuss also. Refers to an act or omission committed by a client or an employer contrary to the prevailing laws and regulation. Looks to be very simple definition. Two things important, one I would like to highlight here, that one is the client or an employer. So this is applicable equally to chartered accountants who are in practice as well as who are in employment. And there are two separate sections for that, and we will tackle both of them. And in a recently held, I mean, whatever applicable from 1st October 2022, we have changed the applicability to members in industry and members in practice in a different manner, which we can go through further. So what is it basically NOCLAR about? It's very easy to understand that omission or commission committed by the client or employer contrary to prevailing laws and regulation. So it's very easy to define. People feel that what is their new thing in that? Now, what does that mean? That means that the NOCLAR, does that mean that any kind of a violation we have to just look into it? The NOCLAR does not only mean the reporting financial laws or reporting on financial laws. NOCLAR presumes, this principle presumes that as an auditor or as a chartered accountant in employment, I have, as a professional accountant or chartered accountant, I have much more responsibility than merely the responsibility given for the purpose as an auditor or as an employee. I have a responsibility because I'm tackling the financial information. The financial information is actually a mirror of or an indicator of what is happening in a business. So certain things may not be directly converted into a financial information at that point of a time, but it may be an indicator of a further problem or future issues which might arise. So as a professional accountant, as a chartered accountant, it is my duty that or a responsibility not to turn blind eye to a matter. Just because it is not impacting my financial statement today, I should not turn blind eye to it. Therefore, this principle actually has been brought in to, in fact, the cast, or to perhaps I can say the recognize the responsibility on the chartered accountants, which is much beyond the financial reporting or financial accounting responsibility, and it's a responsibility towards the society or a public interest. Now, we have to view this from this perspective. Let us understand this. Now, as I said, Section 260 is talking about the NOCLAR for professional accountants in service, so chartered accountants in service. Now, as I said, it is the definition is same: omission or commission, intentional or unintentional, which are contrary to the prevailing laws and regulations. Now, if I'm in employment, I have to see that this commission or omission, intentional or unintentional, which are in the prohibition or against the contrary to the prevailing laws and regulation, but committed by whom? The professional accountants employing organization. So if my organization is committing something, if the people who are charged in governance or the management or other individuals, right, under the direction of which, working under the direction of employing organizations are committing such kind of a omission or commission, it may be intentional or unintentional, which leads to a contravention of prevailing laws and regulations. These contraventions I have to understand and tackle. How to tackle, we'll see it. So only these four people, when I'm in employment, I have to see whether my company, suppose I'm in company, it's whether my company's management, my company's people who are in governance, or acting, other individuals who are acting under the directions of those people in governance. So if these four kind of a people commit any kind of a act or omission which is leading to the contravention of any prevailing laws and regulation, my eyes should open, and I should not only be restricted to seeing the financial impact, whether there is a financial impact or not. Today, whether there is a financial impact or not. My eyes should open, and I must go much beyond that. That is a NOCLAR principle. It is explained again in this slide, core of NOCLAR. Now, it guides on when should a professional accountant override the duty of confidentiality and disclose NOCLAR to an appropriate authority. It seeks the balancing act in the public interest and principle of confidentiality. The important point, what is reasonable to ask for professional accountant within the role of public interest. So as we all know, the confidentiality in Indian law, in Chartered Accountants Act, is under the act and not merely a principle. Now, there is one side there's a confidentiality, one side there's a public interest. Now, one has to balance between these two and bring these non-compliances, even though these are not impacting the financial statements today, right? And therefore, these NOCLAR principles ask us to, actually walk on the tightrope. At one side confidentiality, one side public interest. So how to do it? To begin with, the NOCLAR is for employees in practice, the chartered accountants in employment or service have been made applicable from 1st October 2022 only to the senior professional accountant in service, which are employees of the listed entities. That is very clear. So it is a limited application to begin with. Now, what is senior professional accountant? That is also been explained. Senior professional accountants in service refers to key managerial persons. These are directors, officers, senior employees. Not typically the people who are able to exert influence or make decisions or take control of certain situations in the organization. So these is definitely, there's an expectation for such individual to take action in a public interest. They will definitely see their own organization interest, but in addition to that, they are in such a senior position, they must also look at the public interest. As a chartered accountant, as a professional accountant, they must also look at the public interest, and that's an ethical principle for us. So this is the where it is applicable to the senior professional accountants. Now, how to tackle it, how to go about it? So typically one has to understand. One has to go much beyond the laws which are typically affecting only the financial statement. Suppose I am a CFO in a company. I may be tackling the financial accounts and I'm in charge of these finances and finalization and preparing the financial statements, arranging a finance. But much beyond that, if something is happening, right, it is my duty, as I said, since being a senior professional accountant in service, it's my duty to see that this non-compliance should be brought to the proper notice. We'll see how it is to be brought. Now, whether that does mean that I must understand all laws and regulations, no, that does not mean. So basically, I must understand, obtain the understanding of the subject matter. If at all I come to know there's a non-compliance, if I come to know that there's suspected non-compliance, I must find out, I must understand this subject matter. Now, what is that subject matter? What is the nature of non-compliance? What is an applicability of relevant laws and regulations to these circumstances? Whether there is any consequences, to my organization because of this non-compliance, which is fundamental in nature, which would affect the investors, creditors, stakeholders, employees, or general public at large. So from that perspective, I must get an understanding of the matter. Then, having understood the matter, I must now able to address it properly. Now, how I can address it? The professional accountant is expected to apply the knowledge and expertise. Now, does that mean, as I mentioned, I should apply the knowledge? I should have a knowledge of each and every laws and regulation. The code very clearly says, it is there in front of your screen also, right? I will apply the knowledge, exercise my judgment, but definitely I'm not expected to have that level of understanding of those laws, right? In addition to what is expected from me, right, of being in that position in the organization. So I'm not expected to be an expert in all laws, but sitting on this position, right, depending upon the nature and significance of the matter, right, it might cause, it might take an appropriate step, or I might get sensitization regarding that something has happened. Now, if something has happened, some violation has happened, that sensitization is there with me, or it is expected to be there with me, then I must able to start investigating it internally. And as I said, that it is not expected that we must have a complete knowledge or that level of knowledge regarding all the laws. But having got a sensitization about that, I must start investigating. I can take consultation from the others. I may consult the seniors of the employing organization. I may consult with my institute or legal counsel or expert in, say, for example, environmental law is there. I may consult certain environmental law or a person in an organization who is tackling that. So these kind of things, steps should be taken. Now, after having noticed or after having coming to the conclusion that there is a non-compliance after this consultative process, this matter should be discussed with the immediate superior. If the immediate superior is also involved in this matter, the matter should be escalated to the next higher level authority within the employing organization. Now, I can communicate if at all a next level authority also is not turning good ears to me. I may go to those charged with governance, say board level, or comply with the laws and regulations where I am supposed to report it outside to some authority, and whatever have the consequences of non-compliance or suspected non-compliance rectified and remediated and mitigated. So this kind of a escalation of matter should be there, and if at all the matter is not being addressed at all, or matter is committed by those charged with governance only, or the board level or a senior most level only, then I must assess whether I can go out and overrule the confidentiality or not, and then I can take my decisions in this regard, so that the matter is rectified, remediated, reduce the risk of reoccurrence, right? And these actions are expected from the chartered accountant. So in addition to that, whether I'll also determine whether I should discuss with an external auditor also, if needed. So it is not giving a blanket permission कि आपके हाथ में कुछ मिला है तो चलो seniors के against झंडा लेके खड़े हो जाओ. That is not a thing. So one has to be very reasonable in this. Having noticed it, get an information, form your own view on this regard, discuss this with your seniors. If seniors are not listening or seniors are involved in this, go to the next level, go to the management level, go to the director, those charged with governance level. If you feel that this needs to be reported outside in the public interest, go outside the organization, vis-a-vis if it is permitted by that respective law and regulations. For example, fraud is occurring. As a CFO, it is expected from me that if I'm reporting outside should be done because it is a public affecting a public at large. It needs to be done if it is allowed by law, right? So that has to be done. That is the way the matter should be addressed. Now, as I said, the determining whether the further action should be taken or not, if it is in public interest, considering the current laws and regulation, considering the provisions, whether I can go beyond the company and to the authority. In a public interest, I must go beyond and take a further action also. As far as employment is concerned, the section 260 goes beyond the existent actual occurrence or suspected occurrence of non-compliance. It says that in exceptional circumstances, the professional accountant may become aware of an actual or intended conduct that the accountant has reason to believe would constitute an imminent breach of law. So today, I'm not very sure. Today, the conduct has happened, but this conduct may lead in future to a breach of law, may or may not lead in the future to for a breach of law. So that's an imminent breach. Today, nothing has happened, but such kind of a thing, if it continues, I'm apprehensive. There's a difference between suspected non-compliance and imminent breach. Suspected non-compliance means that there is a non-compliance which has happened today, but I'm not able to conclude because I'm not that much expert. Imminent breach means there is no non-compliance today. There is a conduct which is happening in the company, the act which is happening in the company or in an organization, which might lead in future for a breach of law. So this is something perhaps looking at the future. So any conduct, such conduct which is happening to the, may lead to the imminent breach in future, would cause a substantial harm to investors, creditors, stakeholders, etc., general public at large. So if it is appropriate to discuss the matter with the management, one has to discuss. The accountant shall exercise the professional judgment and determine whether to disclose the matter immediately to the appropriate authority. Now, if that is of that magnitude, so here one has to be very careful. One cannot simply conclude on its own. So any conduct which may lead to a certain harm in future to a general public, employees, investors, etc., it has to be brought out in the notice of the those charged with governance or the further authorities. Now, what would these repercussions of non-compliance? This non-compliance might typically result in fines, litigations, other consequences of employing organizations. Now, it is going much beyond the financial statement, right? Importantly, such non-compliance might have a wider public interest implication, as you can see. So only financial implications, I'm not going to look into it. Definitely one aspect is there that it is impacting a financial statement, but it is going much beyond. It may lead to relocation, it may lead to closure of the business, it may lead to termination of certain class of the employees, it may lead to a dent in the investors' investments, or a creditor's issue might arise. So that kind of thing would lead to it may harm a general public. So any such issue which may be beyond the beyond the financial statement, these all repercussions one will have to look into it. But this section 260 would not tackle certain non-compliance. Which are those non-compliances? The personal misconduct unrelated to the business activities of an employing organization. If one of the employees or one of the higher-ups in an employing organization is doing certain misconduct, which is leading to a violation of any law, but which is not related to a business activity of an employing organization, these non-compliances need not look into it further. Non-compliances by the persons which we are earlier discussed, that is employing organizations, management, or those charged with governance, or people who are acting under the instructions of those charged with governance. Other than this, if somebody is doing this non-compliance, definitely it is not expected by a chartered accountant in employment to look into these kind of a non-compliances. The professional accountant, I mean, one has to find the guidance in this section helpful in considering how to respond to these situations, and the guidance is given as far as the documentation also is concerned. I'm not going in detail of documentation per se, because it is a self-explanatory in this regard. There is one more part of this section 260 which has not been made applicable by the Ethical Standard Board and the Council of Institute. That is regarding the provisions which are relating to professional accountants other than senior professional accountants. So these provisions are not applicable. These are there in Code Volume 1, but these are not applicable. As I said earlier also, as when discussing the applicability, Section 260 is applicable to a senior professional accountants who are in employment with the listed companies. So other than senior professional accountants, Section 260 is not applicable. So typically the NOCLAR principle is not applicable to employees, professional accountants who are in employment, who are other than senior professional accountant, who are other than at senior level in the organization. Friends, this was regarding the NOCLAR for professional accountants in service. Going further, Section 360 regarding the NOCLAR for professional accountant in practice. Again, NOCLAR principle is same. If you have to explain act or omission, intentional or unintentional, which is contrary to the prevailing laws and regulation. Very simple. Now here, done by whom? Committed by whom? There we have seen it's an employing organization, those charged with governance, management, or people who are acting under the direction of the management. Here, similar set of people, a client, or those charged with governance of the client, management of the clients, or other individual working under the direction of the client. So any non-compliance which is committed under this would be attracting the attention of the chartered accountants in practice. Now, what is an applicability of Section 360? Please remember, applicability of Section 260 and 360 is slightly different. 360 is applicable to the chartered accountants in practice. So it is applicable to audit engagements of entities, the shares of which are listed on recognized stock exchanges in India and have a net worth of 250 crores rupees or more. We have decided to apply this in this Section 360 in a phased manner. So in this first phase, it is applicable to audit engagements, to the entities whose shares are listed in the recognized stock exchange in India and have a net worth 250 crores and more. Whereas 260 is applicable to only listed entities. Now here, friends, two important things are there: audit and audit engagements. So it is applicable only to audit engagements. Now, the definition of audit engagement has been given in this section only, has been explained in this section only. The audit or audit engagement shall mean a reasonable assurance engagement in which a professional accountant in public practice expresses an opinion whether a financial statements give a true and fair view in accordance with an applicable financial reporting net framework. So audit engagement definition, which is given in volume 1, there also we have reduced a little bit and we have restricted ourselves in the beginning only to the financial reporting audit, so to say the statutory audit in our what you can say the regular wordings. Further, as I said, it is applicable only to the listed entities whose shares have been listed in the recognized stock exchanges having net worth more than 250 crores. So if a debt listing is done of a company, for that it will not be applicable, right? Now, as I said, this is a phased manner application. So applicability of Section 360 will subsequently extended to all the listed entities. So to begin with, we have started with only the entities having 250 crores net worth or more. Now, friends, here, what are the responsibilities? As we have discussed, this is applicable only to audit engagements. So typically during the course of audit, a professional accountant may become aware of certain non-compliance. Now, the step has to be taken on a timely basis. As we discussed in the earlier section also, that while there also during the service and here during the course of audit. Now, during the course of audit, typically I am tackling certain laws, financial statements. I'm going to comment on the financial statement, give an opinion, express an opinion on the financial statements. So while doing that, definitely certain non-compliance regarding the financial laws I'll have to or I must notice, definitely. But there can be certain things which are beyond that also. So action, we have to comply with this section and take a timely basis, action on timely basis. Now, taking timely steps means what? We'll have to regard, we'll have to keep in the nature of the matter. We also have to regard the potential harm to the interest of the entity, investors, creditors, employees, etc., etc. I'll give a very simple example. Although it may sound to be very, what you can say, the crude in that sense. During the course of audit, suppose I find some penalty has been levied for not following an environmental law. Typically, I may lead to a financial impact has been given. Otherwise, I would have been satisfied about it, giving some comment in notes to accounts or something of that kind. But whether it is going to harm public at large in future, we have certain instances I don't want to name. So whether this violation or this non-compliance today would lead to a certain kind of a damage to a society at large, employees, closure of the organization, one must take a timely action on that. So again, similar manner like we have discussed for employment. So if auditor becomes aware of non-compliance, he'll obtain the understanding of the matter. Now the understanding again shall include the nature of non-compliance, circumstances, etc., etc. Now we must apply our knowledge and professional judgment, again similar manner as we have discussed. But as an auditor, I am not supposed to know all laws and regulations on earth, right? Other laws and regulations, to the extent I am required to understand it from the perspective of my undertaking my audit engagement, I am expected to know only that much. And therefore, this principle very clearly says that we are not expecting you, auditor, to be an expert in all laws. But yes, if you are finding something which you feel, which is very evident, the non-compliance, see, the environmental law was violated, you have seen the penalty levied for that. So that must open our eyes, that must sensitize us. There is something which I must at least inquire. Right? So whether an act constitutes non-compliance is ultimately a matter to be determined by court. I know that, right? We'll definitely not in the judge's position at this moment. But there is something which is happening. So when in encountering non-compliance, the accountant shall obtain understanding of legal regulatory provisions. So I must understand, once I have seen that this has happened, I must understand that what is the regulatory provisions in this regard. So any requirement is there under that law where it has to be reported to an appropriate authority. Friends, we may not be knowing at all that certain RBI provisions are there where auditor is supposed to report to RBI. Unless we go through that, even it is much beyond our financial, balance sheet and profit and loss account. It may give true and fair view, but certain things if we don't report, which is there in those laws. So any prohibition which is on alerting the client, because it may impact the client in future, client perhaps may not know, because certain non-compliances may happen at the ground level. People sitting at the board level or those governance level may not knowing it at all. It may not get reported to them. Many times, many of the things are not reported to even board of directors. So obtaining an understanding, I may not have a knowledge, but I must have a understanding of that. I must get an understanding of that. When it's suspected non-compliance is there, I suspect that there's a non-compliance. These matters should be discussed with the management, those charged with governance. If the management is involved, then definitely that matter has to be discussed with those charged with governance. Having understood this, non-compliance and suspected non-compliance with the management, and where appropriate those charged with governance, the chartered accountant shall advise them to take appropriate timely action. See, when we discuss it and when they understand that it is there, a timely action has to be there for rectification, taking a remedial step, mitigating the difficulties or consequences, seeing to it that certain action is taken for so that it should not happen appropriately. It has to be reported to the appropriate authority. The auditor shall also consider whether the management and those charged with governance understand their legal and regulatory requirements. Now, sitting in the auditor's chair, perhaps one may feel that it is demanding much more things. But yes, certain things we can get an information, and we must understand also whether the people sitting at the helm of the affairs in the client, whether they really know that what can be repercussions of this, whether they understand their regulatory requirements or not. I can just give you one very simple instance. Although in the private limited company, there is a rule in RBI called 50-50 rule, that 50% of investment in a financial assets and 50% of income is a financial income. It would lead to a company becoming a NBFC, and it has to be registered. Whether the people sitting in it may not be applicable directly in this case, because these are very applicable right now to listed entities per se. But typically people don't understand also that what is the legal responsibilities in this regard. So one has to analyze that, whether the people sitting at the helm of the affairs know that there are certain legal responsibilities attached, regulatory responsibilities attached, which they have to comply. Now, if they don't understand their legal responsibilities, then definitely it is auditor has to suggest, advise them or suggest them that and recommend them to obtain the legal advice, and take them certain legal advice and understanding shall comply with the applicable of the following laws and regulations. One has to understand and make them apply in the organizations. The requirements under the auditing standards. Now, our auditing standard itself specifies so many things. Now, we have to make them understand that these are the requirements in the auditing standards, right? Relating to identifying, responding, SA 250 is already there, and it is being revised also now, right? Regarding the non-compliance with laws and regulations, including fraud, communicating with those charged with governance, non-compliance is to be reported, right? Implications have to be reported in certain cases. So all these things have to be communicated and make them aware in this regard. Having done so, if you are not satisfied in this regard, then the further steps will have to be taken by an auditor with respect to reporting to the entities, reporting to the authorities, where perhaps the steps are not sufficiently taken. We'll discuss that also in further slides. But before that, similar kind of a situation may arise where the consolidated auditor is auditing a consolidated financial statements and become aware of non-compliance in relation to a component in a group. So I'm doing just a consolidation work. While doing a consolidation work, I come across certain non-compliance in a component of a group. So in case of a parent company listed in India, for the component is a listed entity in either of the following two situations, the accountant shall communicate the matter to the group engagement partner unless prohibited by law. So I may not be doing that company's audit, but if the law does not prohibit me, this principle expects me to communicate with that group auditor regarding this non-compliance, which I have noticed while doing the consolidations. So I'm just rushing here. So communication with respect to group, where the group engagement partner becomes aware of a non-compliance during the audit of the consolidated financial statement, the group engagement partner shall consider whether the matter might be relevant for one or more components. I have noticed it, but I am not very clear whether it is to be communicated to all the components. There may be different components. I have noticed it in one component, or I have noticed in certain transaction which is impacting certain components. So I have to analyze it, whether it will be applicable to the all the components or not, and whether it has to be I have to communicate with all of them or not. So one may do certain different audits of a statutory audit of one component, whether I have to communicate with the statutory auditor of that component in a group. One has to analyze. So this consideration shall be in addition to the responding to the matter in the context of the group audit in accordance with the provisions of this section. So I am doing a group audit. In this context, definitely I have to address the matter. But in addition to that, whether I should communicate to the component auditor also and ask the component auditor also to look into that aspect from his perspective. So that one has to take a call and come to the conclusion in this regard. If a non-compliance might be relevant for one or more components, we have discussed earlier. The group engagement partner shall take steps to have a matter communicated to those performing work at the components unless prohibited from doing so by law. So unless the law prohibits you, unless the law denies that this matter cannot be communicated. So here the confidentiality aspect may be there, but at the same time, when you are doing a group audit and when there are component auditor, there are definitely provisions which requires the communication between the component auditor and the group auditor. So here, law specifically does not prohibit you. In fact, law tells you, or the provisions or regulations tell you that you can communicate with each other in this regard. So appropriate inquiry is also to be made with the management and the information which is available as to whether the relevant component is subject to audit, and if so, to ascertain the extent practicable the identity of the auditor. So here again, one has to understand the situation, whether my laws and regulations allow me to communicate with the other auditor or not. Having done this, having understood this, having communicated with this, the component auditor, I have to determine whether any further action is needed or not. So after understanding, discussing with the management, discussing with certain legal experts, discussing with the subject experts, discussing with the component auditors, or as a component auditor, having discussed with the group auditor, group engagement partners, I shall assess now whether this non-compliance, right, whether the response of the management given, the details given by the management, whether this is sufficient or not. Now, if it is not sufficient, if it is not appropriate, the judgment has to be exercised as regards the further action. Now, the code very clearly states that in making this determination, the accountant shall consider RITP, means whether the reasonable and informed third party would be likely to conclude that the accountant has acted appropriately in the public interest. Now, friend, this is very important. Having known the response of the management or those charged with governance or the component auditor or the group auditor, as the case may be, I may decide, okay, fine, I'm satisfied with this, there's no further action is needed. Or I may decide that my action should be taken further. Now, how I should determine it? As I said, volume 1 is basically a principle-based volume. So what is the principle mentioned here? RITP is reasonable and informed third party. So the third party, whether if I take not to take action, or if I take action, so and so action, say X action, whether the reasonable and informed third party outside would treat me that I am acted in a public interest or not. Now, this is a judgment which we have to make. This is a judgment which we have to document also. Right? As far as I said, certain FAQs are yet to come from ESB, and we will definitely discuss this documentation aspect also. But definitely, I will have to consider this, whether a third party, which is a reasonable and informed one, would see me that I have discharged my duty in a public interest or not. And that action, if I satisfy myself, I recollect the definition, just digressing from subject. I have studied a definition of audit in my commerce graduation. It read that, I think is by Spessier and Pegler, such an examination of books, accounts, vouchers as would enable an auditor to satisfy himself whether the balance sheet is showing true and fair view and all those things. So it is satisfaction of ourselves. So if I'm able to satisfy myself that my action, that third party would view my action as if it is an appropriate action in public interest, that action should be taken. So I decide to close the chapter or decide to escalate the matter. I have to take it with that thing in mind. The code further goes and lists down the action that can be taken. The further action, what can be taken? Disclosing the matter to an appropriate authority in a specified the respective law. If the law requires, definitely I have to report that matter. And second, and a very important thing, if I'm not satisfied about it at all, if the management has not given me proper response, if the response given by those charged with governance or management, I am not satisfied, that it will not deter the non-compliance further, it would not mitigate the consequences in future, I must withdraw. I can withdraw from the engagement, right? And the professional relationship were permitted by law and regulation. Of course, it has to be permitted by law and regulation. Then I can withdraw from this assignment completely, engagement completely. Now, withdrawing from the engagement and the professional relationship is not substitute for taking an actions. Please remember, friends, that does not mean that I cannot take action further. Withdrawing means I am not satisfied about the managements or the people who are those charged with governance, the action by them, right? So it does not substitute the taking further action that might be needed to achieve the professional accountant's objective. So that reasonable and informed third party's view regarding me, that is always there in my mind. So even if I withdraw from this engagement, I must remember this, that my duty is not over, right? However, there might be limitations to the further action, naturally, because I am out of the audit engagement, my actions would be limited. I may not be privy to the many information further or privy to many actions further, right? So this is the action which can be taken by an auditor in this case. Now, every now and then we cannot go and report to the matter to the respective authorities. It can be said to be a last action that this matter should be reported to a respective appropriate authority. The disclosure of matter to an appropriate authority would be precluded if doing so would be contrary to law and regulations. So if the law does not permit me, I cannot go. Otherwise, the purpose of making disclosure is to enable an appropriate authority to cause a matter to be investigated in the public interest. So in the public interest, if the law allows me, then I can escalate the matter to the respective authorities. If the accountant determines that the disclosure of non-compliance to an appropriate authority, if required by law, is an appropriate course of action in the circumstances, that disclosure is permitted. So primarily, it must be permitted by law and regulation. Secondly, I must feel that it should be reported. It is necessary that this matter has to be investigated by the authorities further. So the last bullet on this slide is very important. As an auditor, I am not supposed to be, showing a gun always to my client. When making such disclosure, the accountant shall act in a good faith and exercise caution when making a statements and assertions. So I should be acting in a very responsible manner. Every now and then, I can't just go to the respective authority just because law has also permitted me. The matter should be of that level. Matter should be, should be completely dissatisfied with the management's action, right? So it has to be properly done in a good faith. So what is the laws and regulation? In fact, I have already explained this. Typically, laws and regulations are the financial laws and regulations, right, which has had a direct effect on the determination of material amounts or disclosure in financial statements. And there are certain other laws and regulations. The compliance is fundamental to the entity's business or existence or operations, of that entity. We are typically concerned about the financial impact, financial this thing. We are not concerned with the concerned with the other laws and regulations per se during the course of financial audit. But as I said, NOCLAR goes much beyond it. And other laws and regulations are also important here. Those laws and regulations which are other than perhaps directly impacting the financial statements of the company as of today, right? As of the date of the audit. The code gives you an example also. Which are the examples of laws and regulations? Fraud, corruption, anti-bribery, money laundering, terrorist financing, proceeds of crime, so and so, so and so, so and so. So many laws are there. And the list is endless. It is just an indicative list. So any law and regulations which is a violation which is happening, but please remember again, during the course of audit, if you observe it, you're not supposed to know completely that law and regulation. But yes, if you are having some sense, or you are getting some knowledge that some violation has happened, it is evident during the course of audit, then the further action is needed in this regard. Now, there are different jurisdictions. ISBA has noted that in certain jurisdictions, certain things are there. For example, in Indian scenario, we have a confidentiality clause also. We have certain communication clause also. So ISBA has understood this, and I'm just briefly highlighting this, that there is a clause 1, part 1 of the first schedule, which highlights about the confidentiality. And it clearly says that a chartered accountant in practice shall be deemed to be guilty of professional misconduct if it discloses the information acquired in the course of the professional engagement to any person other than his client, so engaging him without consent of his client or otherwise as required by law and law for the time being in force. So I cannot disclose the matter to anybody else other than my client. If I'm disclosing it to anybody else, then it should be I must have a backing of legal provision. So if it is required by law, then only I am able to disclose it outside. And I think ISBA has also recognizing this local regulations in this regard. As far as members in service also, similar confidentiality clause is there. Now, what is not there in the scope of NOCLAR, as far as section 360 is concerned? The matters which are clearly inconsequential. So matters which are not at all material in that respect. Some small non-compliance might have occurred. It may not result in a fundamental adverse impact on the organization. So that need not be looked into. The personal misconduct, we have seen in the chartered accountant or professional accountant in service also, section 260 also. Personal misconducts are not covered here. The non-compliance other than by the client or employer or those charged with governance, right? So outside persons committing certain act non-compliance, it may have an impact on indirect impact on the client, but it is not committed by client per se. So as an auditor, you cannot, you need not go into it. So members must remember that he's required to address only NOCLAR only when he encounters, as I said, during the course of his audit, during the course of the providing the professional service. Now, as we all know, the communication clause is there in our code of ethics, and we have to, when the new auditor is appointed in place of an earlier auditor, the new auditor has to communicate with the earlier auditor. Now, that responsibility is there on the incoming auditor, but NOCLAR poses a responsibility on the previous auditor also. If I was a previous auditor, I have withdrawn from the engagement, and after my withdrawal, some other auditor has come, and he makes a specific request to me that kindly let me know if you have observed any any facts which I should remember while conducting my audit, while I should doing my audit. I must, as an earlier auditor who has withdrawn from this, I must explain him why I have withdrawn and what is the suspected non-compliance and what the action the management is was proposing to take for which I am not satisfied. So all these things will have to be explained to the incoming auditor. Now, just as this imminent breach is there in section 260, earlier the imminent breach was there in section 360 also. But for a chartered accountants in practice, imminent breach the provision has been repealed from the code by the council as from 1st October. I mean, from the volume 1 of Code of Ethics. So it is not at all there as far as members in practice is concerned. Now, as I said, documentation is going to be very important. And again, as I said, documentation slides are self-explanatory. I'm not going in detail of that. As I said, FAQ also would be there on certain documentations. So in relation to non-compliance falls within the scope of this section. Following documentation shall be done, how the management and where the applicable, those charged with governance have responded, what is the response. He must document it properly. And mind you, friends, especially for a chartered accountant in practice, it's a documentation which is going to actually where you can project yourself properly that you're tackled with this situation properly or not. Now, these are the changes. I think some of the changes Kemisha ji has already discussed as fees relative size. As far as taxation service, we have already tackled this. We have just explained the word court very clearly that it excludes the tribunal. So taxation service is not applicable. As far as NOCLAR is concerned, I think I have already discussed the changes in this slide. The changes are there. This slide will be, of course, hosted on the website of Ethical Standard Board. But I think rather than understanding the changes, now we have actually understand the provision as it is applicable, right? So as I have said, FAQ and other material towards the adoption and implementation of Code of Ethics will be issued. Volume 1 as of now available on the website without amendments. The members must read it with respect to amendment which we have discussed. Whatever we have discussed today, we will definitely come with the amended copy of Volume 1. And FAQ and related programs, we'll be definitely doing it further. Even a faculty development program in this regard are also being planned. So I'm requesting the members to keep in touch with the Ethical Standard Board and developments in Ethical Standard Board in this regards as far as these new provisions are concerned. And with this, I think I've covered these two provisions in detail. I thank all the participants, and I must acknowledge the efforts of the Ethical Standard Board Secretariat also in this regard, that we have been doing it. I must acknowledge all the members of Ethical Standard Board, because these provisions we have discussed in detail. And in this regard, various branches and the regional councils have helped us in getting the responses of the members. We had different meetings. We have discussed with the different auditing firms in this regard. And we have come up with certain suggestions. And on the basis of that, these provisions have been, I'm not saying completely changed, but at least what is the implementation, how it should be implemented in a phased manner that we are able to do. So this is provisions which are applicable as of now from 1st October 2022. As I said, certain things we will do it in a phased manner. We'll extend it further to listed entities in the future. And definitely responses from the members are much welcome in this regard. We will definitely tackle the questions today, if not possible, or if we are, if I find that it is to be discussed in detail in the Ethical Standard Board, we will take it to the Ethical Standard Board and bring out with an explanation with a short span of time, considering only the World Congress of Accountants, which is going to happen in a few days' time in Mumbai. So thank you very much, everyone, for attending this program, and whatever issues are there, we are here to tackle. Thanks a lot. Thank you, everyone.
Thank you, sir, for the wonderful session. We have received a few questions on these provisions. One is relating to the fees relative size. The question is whether fees includes reimbursement of expenses.
Kemisha ji, आप बताओगे कि I think, to my mind, as I said, certain things will be taking to as a FAQ for Ethical Standard Board. But fees means fees. It is not a reimbursement of expenses, and it should not, reimbursement of expenses should not be included. So I suppose the reimbursement of expenses, we don't take it when we are accounting ourselves in our income and expenditure. We don't take it on income side. So that has to be seen in that perspective also. Yeah, Kemisha ji has joined just now. Sorry.
Yeah,
Okay.
perfect.
Yeah.
Perfect.
Next question is the provision pertaining to fee stock of safeguards if there's a dependence on one client cumulative for more than 2 years, whether there will be applicable from the financial year 2020 to 23.
Kemisha ji,
Yeah,
see, friends.
Start from September.
Yes, it is. It has to be applicable because it is applicable from 1st October 2022. But as she has rightly explained, we have to come up with the reporting format and all, and we will come with that. I mean, how much time you have to report and all those things.
And Chairman, we have like 2 years for that, for developing that formats also, because 2 consecutive years if position is that, so that reporting requirement will be there in that case.
Yes.
So that is perfect. That will start from this year only. This is my opinion.
Yes.
Thank you, ma'am. Next question is, I'm of the view that NOCLAR will apply to internal auditor who is appointed by the board as well. Do you agree with the view or do you have any different view?
See, I don't know whom you are talking. If an internal auditor is an employee of the company, the section 260 will be applicable to an internal auditor. If an internal auditor is not an employee of the company, is naturally section 260 is not applicable. Section 360, as we have just now discussed, it is applicable to an audit engagement, and we have explained the audit engagement. It is reporting on the financial framework. No, it's a statutory audit. So internal audit, if he is not an employee of the company, NOCLAR would not be applicable at this stage.
Next question, are the provisions of NOCLAR for employees applicable to listed entities also applicable to the subsidiary of such entities in outside India?
Yeah, madam, aap bataiye.
Yeah, perfectly applicable, and that is a definition also, that group of company and associate companies.
Thank you, ma'am. Next question. NOCLAR reported by employee KMP. He is facing action by owner, board, TCWG. Any view on this?
Sorry, I just missed it.
NOCLAR reported by the employee key manager person. He is facing action by the owner, board, TCWG. Any views on this?
He's facing action.
He's facing action by owner, board, TCWG.
It has already happened.
It appears, sir, in question.
And NOCLAR just now became applicable in India. See, that question may be that if the employee faces an action, then what would happen? Perhaps that may be the question.
From management side, I think.
Yeah.
Management has taken action, I think.
So typically one has to understand that this is a principle applicable for an employee. He has to take stock of situation and report to the management in that perspective. If it's a properly information, if we have discussed in detail how one can get an information, how one can discuss it, and how one can escalate it. If that is being escalated in that form, I think even the whistleblower policy is there in the organization. So in that, through that also one can go in this regard. And I don't think some action is would be taken in this regard by a company in this. ये हुआ नहीं रहेगा, ये शायद apprehension रहेगा. It may be an apprehension of a member who is posing this query.
Maybe he has faced some situations regarding that and correlate with NOCLAR. That is not applicable at that time. That was not applicable.
Thank you, ma'am. Next question. It will be helpful if ICI provides format of documentation in NOCLAR related matter. In its absence, how a member is expected to maintain such documentation?
Yeah, we will. ये तो है अपना. At least some guidance will be there. It is already there. We have discussed in this section 260 and 360 also. But little bit more elaboration will be there, and we will definitely discuss in ethical standard board.
And last is definition of PI has been revised by ISBA, which ICI should be considering in future.
Madam, बताइए.
Yeah, that is continuous process, I would say, and definitely we are even not only for PI, and regularly we are considering development related to International Code of Ethics, and we are considering our ethical standard board meeting on regular basis.
I can just add to what Madam has said that ASBA has revised this definition. Now, see, it is again, ASBA's definition is from the international perspective. Each country has its own, different local circumstances. At certain places in an existing definition, also our definition of pi will be more exhaustive than ASBA. So naturally, when we adopt it, it has to be adopted and adapted in the Indian scenario, and that will be done as Kemisha ji has mentioned. It may or may not be word to word. One cannot say right now. We'll have to discuss it, but definitely the principle will be adopted.
Thank you, sir and ma'am. Only these are the questions. Now, I would like to request Sri Raj Chawla, sir, to propose a vote of thanks.
Before Rajji proposes vote of thanks, I would again appeal to members that your suggestions, queries for preparing the FAQs, please post it to the esb@ici.in so that we will be able to take a holistic view, because certain circumstances, certain instances, or certain issues we also might not foresee. Certain members may foresee that. So please post it to esb@ici.in. Over to Raji. Raji, you are on mute.
Thank you, Mangesh Bhai. Good evening to all. First of all, I am thankful to CA Mangesh P. Kimre, Chairman Ethical Standard Board, and CA Kamisha Soni ji, Vice Chairperson Ethical Standard Board, for the wonderful session in today's webinar organized by Ethical Standard Board on the topic of free relative size tax services to audit clients and NOCLAR. They have indeed clarified in detail the various compliances and changes from earlier position which the member would require to comply with. It will certainly go a long way to make members aware of the provision and amendment pertaining to Volume 1 of Code of Ethics. ICI is a member of International Federation of Accountants and is thus obliged for convergence with the various pronouncements of IFAC so far as they are not contrary to the domestic stipulation of India. IESBA, International Ethical Standard Board for Accountant, is the ethics standard setting board of IFAC. ICI coverage with the IESBA Code of Ethics for the first time in its 2009 edition of Code of Ethics. Subsequently, ICI Code of Ethics has been covered with the IESBA Code of Ethics in 2020. However, certain provision of Volume 1 of Code of Ethics were deferred earlier, which have been applicable from 1st of October 2022 with certain amendments. It is important for the members and firms to be aware of the revised provision of Volume 1 of Code of Ethics. So far, it should be able to implement them. In this direction, this is the first program of Ethical Standard Board organized after the announcement dated 29 September 2022, which the amendment Code of Ethics have been brought. Much more program will be held in future. Thank you for your participation and interest in the webinar. Thank you, sir. Thank you, everyone.
Thank you, everyone.
Thank you.
Thanks a lot.
Thank you, everyone.
We are
Thank
in
you.
fact part of ASB, so no thanks to us. In fact, thanks to all the members who are attending and we participate.
Thank you.